And let's cross over now to Asia, where markets closed mostly higher on Thursday, following the lower close on Wall Street as investors passed details on U.S. President Donald Trump's highly anticipated tax reform plans. Japan's benchmark Nikkei 225 index eased by 0.19% to close at 19,251.87 on Thursday. The ASX 200 rose 0.16% to close at 5,921.5 after trading effectively flat earlier in the session. In South Korea, the Kospi reversed losses made earlier in the session to trade higher by 0.07% as major companies reported earnings, while shares in Greater China closed higher after a roller coaster session. The Shanghai Composite was 0.37% higher at 3,152.54 after initially tumbling around 1.3%. The Shenzhen Composite also gained 0.54% to finish at 1,900.03. Of course, the mood was similar in Hong Kong, where the Hang Seng Index was up 0.35%. Away from those numbers now, the World Bank has kept its crude oil price forecast for 2017 unchanged at $55 per barrel on expectations that prices of industrial commodities will continue to rise this year and next. In its latest quarterly commodities market outlook report, the institution predicted that crude oil prices will jump 25.7% to reach $55 per barrel in 2017. The global lender expects crude oil prices to grow 8.2% year-on-year to an average of $60 per barrel in 2018, saying the rise in oil prices will be supported by production cutbacks by OPEC members. Now, staying with activities at the commodities market, oil prices fell today, weighed down by oversupply, but of course losses were limited by expectations that major exporters would agree to extend production cuts to try to rebalance the markets. Benchmark crude was down 60 cents at $51.32 per barrel in early trade, while U.S. light crude was down 55 cents at $49.07 per barrel. And now let's talk more about the markets with Adim Okwesa, a research analyst at financial derivatives company. Thanks for joining us on the program, Adim. Now let's begin this conversation with the World Bank keeping its crude oil price forecast for 2017 unchanged at $55 per barrel, and that's on expectations that prices of industrial commodities will continue to rise for this year and in 2018. What's your opinion about this?
Well, I think the World Bank's forecast is fair caution at the same time. I see oil prices closer to $60 per barrel. World Bank's premised on production cutbacks by OPEC and other OPEC countries. But that's only the supply side. On the demand part of the equation, demand is set to increase considerably on improved global growth. Both the IMF and the World Bank recently revised upwards their global growth forecast for 2017. Developed economies like the US, Germany, and France are set to expand further this year. And concerns about sluggish growth in emerging economies like China, Russia, and Brazil are easing. So I think all in all, 2017 should be a much better year than 2016. I think the commodity bust cycle is over and it should be a better year.
Now let's look at the current oil price. Now, although it dropped today, but on the average, it's been on the increase. So what are the major drivers?
Well, oil prices have been volatile in recent weeks, and like you rightly said, on average has been on the increase. I think what we're seeing in the market is that oil prices are trading on news flows. Yesterday, the U.S. Energy Information Administration revealed that U.S. crude stockpiles declined more than expected, which helped reduce pressure on prices. But apart from that, an uptick in geopolitical tensions after Turkey carried out an airstrike in northern Syria and Iraq also helped support prices.
Now, OPEC members are set to meet next month, and of course, there are lots of issues to chew, including the U.S. crude supply, plus the need to or not to increase production deal. What's your expectation from this meeting?
Well, I think so far the consensus is that the deal will be extended beyond June. What we're seeing now is that there are already a lot of closed door meetings taking between several stakeholders taking place. And as that May 25th date draws closer, we should see those type of diplomatic efforts intensify. But another interesting development that I came across is that Saudi Arabia recently cut back on its on benefits of minister salaries and other public sector workers. What this implies is that maybe Saudi Arabia's government finances are under pressure and there might be a greater need for higher oil prices. I think that if Saudi Arabia needs the deal to be extended, to be able to exert its pressure, its influence on other OPEC members and ensure that the deal is extended.
Thank you
But
very
the
much,
question is,
Adim, for sharing your thoughts with us on the commodities market update. Adim Okwesa is a research analyst with financial derivatives company. Well, moving on now, South Africa's Competition Tribunal has confirmed a 69.5 million rand settlement with Citibank for its role in rigging rand currency trading, making the U.S. bank the first among more than a dozen banks named in a probe. The commission, which investigates cases before referring them to the tribunal for adjudication, said in February that it had found more than a dozen local and foreign banks colluded to coordinate trading the rand and the U.S. dollar. It recommended fines amounting to 10% of the bank's South African revenues in a scandal that has piled on political pressure on local banks. The tribunal said Citibank admitted to manipulating the price of bids and offers through agreements to refrain from trading and created fictitious bids and offers. Well, Business Incorporated will be back in just a moment. Please stay with us.